If you've been following me for a while, you know that I'm a swing trader, not really a day trader. I've been day trading for a few years in the past, but really my edge is into the higher time frame, and the daily chart, the forward chart sometimes. I've usually gone even into the 1 hour chart in the past, but I know for a fact that not everyone is going to be good at trading these time frames. Some people are bad at holding trades. They hate having to hold trades that end up being losers, or they trade with forced patience, but they always close their trades too early, and then they miss out on big profits. So I feel like I would be doing a big disservice if I was focusing only on teaching people swing trading and kind of like forcing them to be disciplined, forcing them to hold trades, to stay patient. It'd be tough because not everyone has the same personality and the same way of doing things. So I got a lot of requests in the past about having a scalping course. Again, I'm not a scalper, but I finally fell for it. And I decided to bring on the Disaster Trade team, one of the best scalpers I know. He's been on the channel multiple times. His name is Jean-François Boucher, one of the best guys I know to teach scalping. He's been doing this for multiple years now. Went through a whole story of losing money in the beginning, got divorced, went through a really tough time, and eventually turned things around, made it all back, and of course more, and now he's trading full-time. So I basically asked him to teach scalping for students. We came up with this program that's called Elite Scalping. I'll get you through it a little bit, how that works out, but then I want you to see how Jean-François trades live, so we'll get there in just a minute. Basically, I want to have a way for you to be able to learn a method of scalping, which worked in the past. You can see his accounts, or having really amazing liquidity curves, very smooth overall. A lot more smooth than what I could do myself with swing trading. This is a lot more consistent. Over the same period of time, I'm able to go and have a lot of ups and downs. He's able to trade very smooth. It's kind of cool. He's of course people do that in the past too. The idea is you get a course where you can learn the scalping method he uses, which is a very high win rate method. So he's using big stop losses that are preventive, not going to be used for all kind of trading. Like you're not going to get stopped out every day or even every week, maybe not even every month. It happens very rarely because a lot of trade management goes into it. So Jean-François is the guy who's doing this. You might have seen him on YouTube before. Had a few interviews on my channel in the past, and to be able to build a few good accounts over the past few years, which is kind of cool to see. So you learn the method with him, and then we jump every week. You have 2 live sessions where Jean-François is going to show up, trade live for 2 hours or so, and you'll be able to take trades with him live. And I think that's pretty cool. I've done this before because I don't want to be doing live sessions myself. My trades take a long time to close. It's pointless for me to go there, show up at the chart, trade 5 minutes, enter trades, and then leave them for a week. But someone who's a day trader or even a scalper who goes in and out of trades quickly, I think it's going to be pretty game changer to have these live sessions where you can actually watch him trade, see how a professional trader is doing it, and then replicate the same thing on the other days where he's not showing up live for these sessions. You can actually practice live yourself, and you have him trade live for other days. You can catch up and kind of see what he's doing and have a bit of more back and forth on your trades. I think it's pretty cool. I know you guys are going to ask, well, what's the method? How does he trade? What is it looking like? Well, I'm going to play a clip right here that goes into how Jean-François trades. You'll see him live on the chart. So let's go right away, and I'll catch you back at the end.
I would start on the daily chart. Today is Easter Friday, Good Friday, so illiquid market, very, very illiquid market. We had employment data come out from the US. And so my process is always the same. I typically would start this at 8 a.m. So 40 minutes from now. I'm about 40 minutes ahead of schedule. But the news has already come out, and so I feel kind of relieved. And basically, we would look at the calendar, then we'd look at the daily chart. And because I live in North America, the daily candle is already 16 hours or so old. And so I'm comparing the daily candle with its predecessor, and I can see we've created overnight a lower high and a lower low. And that tells me that just today, there's a lean towards bearishness, and that could be just a result of the news event. And so I need to go and see this on an hourly scale. And sure enough, we made the high in the middle of the night. We made the low as a result of the news event. And so now I understand where I am in respect to support and resistance. And I can start drawing critical levels that I need to have a call to action. And so from there, I can start looking on a 5-minute scale and appreciate those same levels, but now they're actually closer. And I call these, or we call them, action points, right? We have something to do here. There's a job for us to do at some of these levels if we get to these levels. On average, if you draw these lines over and over, day after day after day, you're going to find after a while that these lines are about 9 to 10 pips apart on average. That happens to be the standard deviation for the euro on a 5-minute chart. All right, so 9 to 10 pips is the average move on the euro chart and on a 5-minute euro chart. So I take that measurement, and this now becomes dynamic. I can take that average support and resistance, and now I can move it around. And with that, I can now use this like a measuring cup in the kitchen. I can measure volatility with my little box. And so at the bottom, when the news came out and we finally made a bottom, what looked like a bottom, I put my first box there. And then I see we broke the box almost immediately. And so in my mind, that tells me, hey, there's a lot of incoming volatility, because otherwise we would have been in the box for the duration of the box. That's a standard deviation, right? And so if that was standard up there, why are we breaking the box in 2 bars down here? Boom, boom. So that immediately begins a new box, right? So I'll just grab this. And now in our mind, we're waiting to travel through this box for the duration of the box. And then boom, we break the box again very early. That tells you there's incoming volatility. And so you put another box there. You still don't know the future. And so you expect this. Most people would expect this to go, oh my God, it's going to the moon. And we know it's going to resistance. It's going to 1 standard deviation, and it stayed there. Right? And so now we're in this box and we're back down 1 standard deviation, and I'm buying at support, right? This is now support, and I will be willing to buy at this level of support down here and all the way down to the original support at the bottom. And so this already defines my risk. It defines how I'm willing to spend my money, where I'm willing to spend my money, and it's literally 1% per box. And so if the market keeps bouncing, I keep targeting 2.7 pips. Every time I click my mouse, I'm taking a 35 pip risk. All right, so my stop loss is down here. And that gives me space to do the work I need to do to get out of this trade if it doesn't work. Right, so I'm managing the risk. And managing means I can add or remove trades at will. Right, I'm not stuck having to obey a stop loss that's predetermined, risk to reward ratio, right? I'm in control of the risk. Therefore, I allow it to be upside down. And I'll tell you right now, the average loss is about 10 to 12 pips. Okay, so it's about 1.5 boxes. My stop loss is literally 4 boxes, 4 standard deviations. Right, so if the stop loss is 4 times my boxes, my average loss is just under 2 boxes. Okay, so it's a way of framing risk. This is a measuring cup, and I know by measuring volatility, I can end up measuring the average daily range. Right, so before the war in Ukraine, the market was moving 8 to 9 boxes per day. And after the war, immediately the day after, the market started moving 10 to 12 boxes per day, right? The boxes did not change. The recipe changed, right? The number of boxes changed. And so now it's how the price is behaving. This is a standard deviation. This price right now is behaving in a standard way. It's moving 9 pips up and down, and it's in the course of taking an hour to do it. Right? And so this is a normal standard deviation. And as long as the price remains normal, I can make my normal 3 pip money. And then when I'm done, I walk away because I turn off the faucet, right? I don't leave open trades. If I have a scalp for 3 pip in the morning that is still open at 4 in the afternoon, I'm breaking all the rules in the book, right? I can't allow a scalp remain to be a swing and then have it close at 36 pip in the middle of the night. So it's up to me to take that loss before I turn off the computer every day, right? So this may even break down, but most people would go, oh my God, it's in drawdown, it's in drawdown. The fact is simple. It's not going here. It's not one straight shot. And so if I can measure where it's approximately going, I can anticipate how it should be behaving, and then it's based on probabilities, right? I set the probability and I play that probability. And the probability is that it's highly, highly likely to stay in the box. If it doesn't stay in the box, right away your radar pops up, ding, 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 and you know you need to behave. You need to do something. If I remove the box, you are clueless. If I remove the box, you don't know what to do, where to do it, when to do it, how to do it. Right? So the box is framing the risk, and it allows us to behave in such a way that you build consistency in your trading system. If you remove the box, the last variable, are inconsistent, right? The variable I'm talking about are these variables, your trading definition, right? When you're swing trading, you may have a 2-to-1 or 3-to-1 risk to reward ratio, but you're looking for it across a universe of instrument. And because of that, no 2 days will deliver the same trades on the same pairs with the same size, the same target, and the same stop loss. Swing trading is nothing but inconsistent. What I'm doing here is quite the opposite. I have one target, one stop loss, one size, one time of day, one instrument, one everything, and the remaining variable is me. And I'm trying to define my behavior by using a box.
All right, so if you want to get started with that program, I'll put the link below. You can check it out. It will have all the details I've shared right here during this quick video. I want to get this going quickly. So the live session will start on July 2nd, which is about the day this video should be published on YouTube. So July 2nd will be where we start. The next session will be on July 4th, and we'll continue like this for a while. If you want to start, you can start right away. I'm going to take about 30 people for the first round because I want to make sure we have a good support. We're able to mentor everyone in the program. Jean-François is able to coach you and give you advice and feedback. A few bonuses are going to come up with the first group of people into this program, Elite Scalping. So these are the bonuses that will come with the program. You get access to a live scalping library. So all the past live sessions Jean-François recorded, which are a lot, you get access to those to watch back, to learn more, to learn from, and to kind of practice with. You get a coaching session with Jean-François to ask me a question, go over some trades, anything you like to do that way. And our monthly mastery calls are going to be calls we do once a month, where Jean-François will show up live, answer questions, maybe cover a topic, kind of go deeper than what you have in the course, answer a few more of these questions, and maybe cover some topics that we don't have in the course. So link is below for this. You can check it out directly. Sign up for this program if you want to. Before I reopen it, I want to see students get results and actually trade live and profitable. That's the goal with all the programs I offer. Might not be for you, of course, if you're someone who trades higher time frame like me, you want to be kind of trading the daily chart, then that's not for you at all. But if you want to go on lower time frame, have faster results, and get in and out of trades quicker, that would be the right program for you. So check out the link below. Let me know if you have any questions or any concerns. I'm happy to help out and answer your questions and kind of cover some doubts you might have on this. And I'll catch you back here in the next video pretty soon. Ciao.